Greetings, members one and all of the Salivation Nation. Well, you can see some green here in the charts with gold and silver and even platinum. Could this mean that we are on the precipice of another bull market with gold and silver? Perhaps. Let's explore. Yes, indeed. You know, we've been seeing downward momentum red in not only the stock market, but also in the precious metals world. And it's been pretty discouraging for a lot of us, especially for those who like silver, who have a lot of hope in silver. But let's look at the Dow Jones Industrial Average, and we can see that as of the recording of this video, it's down over 660 points. If we took a look and see over the last month, we can see a pretty steady decline as fears of the coronavirus, COVID-19, has increased as of late. And over 6 months, we can see an even more dramatic drop from where it was with the high. And from the 1 year, we can see pretty big drop. That almost looks like a crash right there. And how much more will it go down? Well, I think potentially a lot more. Let's take a look at it from the 5-year chart. We can see since 2016, and it's taken quite a big spike upwards. In fact, the markets right now are right around where they were when President Trump was initially elected, took office. But gold's could reverse course next week, and all eyes are surging on U.S. unemployment numbers. And we're going to explore this article here from Kitco and Golubova. Markets continue to be extremely volatile, keeping gold prices on edge, but analysts are not ruling out a temporary course reversal from recent losses. Major U.S. stock indexes kept jumping from green to red on Friday as gold struggled to retain its daily gains, with prices remaining below $1,500 an ounce. April COMEX gold futures were last at $1,494, looking to close down on the week. Significant uncertainty remains going into next week as COVID-19 outbreak continues to spread in the U.S. and Europe, shutting down businesses and hurting local economies. The number of cases across the globe climbed to 245,000 on Friday, with at least 10,031 deaths worldwide. The U.S. cases rose to above 14,000, with at least 205 deaths. In recent measures to fight the virus, California Governor Gavin Newsom issued a stay-at-home order effective Thursday evening. On Friday, New York Andrew Cuomo, the governor there, ordered non-essential businesses to work from home in an attempt to try to contain the spread of the virus. The Pennsylvania governor did the same thing. On top of the majority of banks projecting a recession, many economists are now expecting shocking unemployment numbers out of the U.S. The U.S. weekly jobless claims report, scheduled for Thursday, is the most anticipated data out next week. Yesterday's weekly initial jobless claims spiked 70,000 or 33% to 281,000, but a much bigger surge is likely next week, said ING chief international economist James Knightley. Assuming we have an average out of the 7-fold increase in claims versus last week, this would translate into 2 million rise in jobless claims. By way of comparison, the record high was 695,000 in October of 1982, with the global financial crisis peak being 665,000 in late March 2009, Knightley added. So what does this mean for gold? Gold is a natural safe haven during tough times like these, but analysts warn that prices are likely to continue trading sideways for the short term, as any physical buying is being offset by professional selling to raise cash. The key uncertainty here is whether or not the liquidity crunch, the dash for cash, is going to find some sort of stability, TD Securities commodity strategist Daniel Gali told Kitco News on Friday. During the last few weeks, there was a massive surge in demand for the U.S. dollar, which saw many investors selling gold and silver especially. This has been driven by corporations needing to secure cash to pay employees and money managers seeing increasing margin calls and the dire need to secure U.S. dollars, said Gali. It is unclear whether or not the liquidity crunch is over, but there are some positive signs, especially after everything the Federal Reserve has done, the commodity strategist added. Today we saw the VIX is coming a bit lower. That's the volatility index. That's telling us right there might be a chance that the liquidity crunch has found some support. That would be positive for gold. Gali is watching the 1440 level on the downside and 1515 an ounce on the upside for next week. Many analysts remain neutral on gold prices in the short term, pointing out that the run on cash is not over. Can't see anyone taking any positioning right now. Cash is king and will stay that way, said Rana O'Connell, head of the market analysis for EMEA in Asia regions and NTF International FC Stone. So any course reversal in stocks or other markets is likely to prove only temporary. Everything is reversing course, which is very short term. The major driver within the market would be that what's been happening with the fiscal stimuli, she told Kitco News on Friday. Also, it depends on how quickly and well targeted the injections of those funds are. At the moment, we've got the numbers, but we don't have a huge amount of details as to which direction they're going to go in. Uncertainty related to the COVID-19 outbreak will remain the primary market mover next week, as it is not a man-made crisis like the one in 2008, O'Connell pointed out. Can't see gold doing much in either direction, she said, until there's a vaccine and proper stringent, very wide-scale testing and confidence that by virtue of locking down the immediate pressure will be taken off the emergency services. But gold has a bright future, as the precious metal has done what it is supposed to do during the market plunge, be an insurance policy. And that's how I've always looked at gold. It's a hedge. But a lot of people had to cash it in. It has been a mechanism for raising cash, O'Connell noted. Once things are back up in a stable course, there will be a rebalancing and more interest coming into it. The $1,500 level remains a critical point for gold next week. Blue Line Futures chief market strategist Philip Streibel pointed out. Gold will have trouble moving up while many investors are forced to sell the metal to raise cash to cover for losses or deal with being laid off. These people are selling anything they can to raise capital. But notice this is in the paper market, electronic market. Same thing with silver. All the other macro data out next week will once again take a back seat. Nonetheless, some of the key releases to keep an eye out in the U.S. include Tuesday's manufacturing PMI and new home sales, Wednesday's durable goods and house price index, Thursday fourth quarter GDP, and Friday's PCE price index. Trump wanted this stuff delayed until they get information out, but it is something else. And these numbers come out, it's going to be a brace for impact moment for the markets, and we could see the market really take a move downward if they don't have the stimulus and everything calculated in or baked in. We'll see how it happens, where those funds go, and how they're targeted. It's going to be very interesting indeed to see. By the way, on the day now, the market is down 4.88%, down almost 1,000 points again. So it will be interesting. I think that given everything that this article talked about, what they're not mentioning is the physical demand for gold and especially silver has risen greatly. A massive rise in demand for gold and silver out there. And I think that's going to bode well when the prices start to go back up again for these metals. They could potentially skyrocket, both of them, in light of this, because even the prices are low now and the premiums are high. Just wait until the prices actually start to go up in the paper and ETF worlds, and then the demand the safe haven status of these metals, especially given what's going on with the physical demand, is going to just piggyback on top of each other, and we could see the prices going way up for both metals. We'll find out. We'll see. Keep an eye out. Very interesting indeed how the news cycle, how fast it is occurring these days in this age of information, where everything moves fast. People are reacting very quickly in many different manners and forms. So there you have it. Post your thoughts below. I'd like to extend a multitude of gratitude to you all for watching, and encourage you to please rate, share, comment, and subscribe.